Okay, so let's go across to the next big guest that we've lined up for you. Jayaram, the joint MD of Kotak Mahindra Bank, now joins us from the sidelines of the conference. Afternoon, sir, and thanks so much for joining us. Whatever little bit of enthusiasm that we had, in December or perhaps even early part of January post the good numbers seems to have faded, and now the Nifty and the Sensex returns have flattened out for the entire year. How do you expect the rest of the year to pan out, and what would be your prognosis of, is the Nifty likely to make new highs this year?
No, I think clearly on the back of some of the policy announcements which the government had made during the last few months, the markets certainly were more optimistic. But I think right now, given the fact that the budget is so close by, I think most investors, analysts, etc., are waiting for the budget to figure out where the finance minister will walk the talk in terms of some of the commitments that he had made. And B, they also want to get a sense of what the rest of the year will look like, whether the budget will talk about some of the so-called populist measures which have been talked about, whether it's a food security bill or farm waiver bill and stuff like that, or whether there will be something to indicate that the process of fiscal consolidation will continue forward into the year.
Actually, just to stretch that point before we come to other market issues, the finance ministry has dropped hints about taxing the super rich. We don't know exactly what color that will take, whether it will be an estate duty, whether it would be a 40% slab for some super rich, or whether it would mean some tax on capital gains. We really don't know, maybe assess. But if that idea is fructified in some fashion, will the markets take it hugely negatively?
Well, I think it honestly depends on what is the final way in which the super rich are taxed. I think if it's got to do with something like increasing the surcharge at the highest level, which to me seems the most likely possibility, I don't think it will matter too much from a market's perspective. Even if the slab were to be raised marginally from current levels, I'm not so sure that it will have an impact, certainly in the medium term. It could have a very short-term sort of impact, but in the medium term, I don't think that will bother the market too much. Inheritance tax, of course, is a slightly different sort of issue, because there are all sorts of connotations that go along with it in terms of how that inheritance tax comes through, whether it's modeled on the lines of some of the Western countries, where, for example, people might be forced to sell stock to pay tax, etc. So I think that's walking into a whole new ballgame. But it's unclear at this point of time what that could be.
Sir, the finance minister so far has been very vocal about fiscal constraint, about maintaining it at 5.3% and thereafter reducing it. So perhaps that's already factored into the market expectations from the budget. So what, in your opinion, could be included in the budget which could A, positively or perhaps even negatively surprise the street?
I think what could positively surprise the street is specific things around the capital markets which encourage investors, particularly the Indian retail investor, to put a little more money into equities. I think it's fairly clear from the macros right now that at least for a short period of time, we need capital flows into the country, and the quickest route for this is portfolio flows. So I think there will be a concerted attempt to encourage equity markets, and that could positively surprise the market. What could negatively surprise the market is if there is too much emphasis on some of the populist schemes, whether it's a food security bill, whether it's the farm waiver program, and if the market actually believes that some of these could seriously derail the fiscal consolidation process over a longer period, then that could be a negative factor.
Jayaram, lately actually the budget impact tends to be restricted to perhaps a couple of days, and unless there's a googly like the GAR, usually impact on the overall economy doesn't tend to be for too long. What's your sense therefore for the longer term for the markets? Longer term, I mean for 2013. What would be the sectors you would back?
I think clearly 2013 is not going to be an easy year, because clearly irrespective of intentions of the government, etc., the reality is that many of our macros are in fairly sort of challenging spaces. I mean, whether you're talking about current account deficit, which is the immediate sort of issue, whether you're talking about fiscal deficit, inflation levels, oil prices. So I think there are a fair amount of challenges. And I think clearly what the market hopes will happen is that the government will continue to show the same resolve that seems to have developed over the last few months going forward into next year to contain some of these issues. And particularly on the policy front, if decisions are made, whether in the context of land acquisition bill, whether in terms of some of the environmental clearances, in terms of some of the problems the power industry has had, if some of those decisions are taken, I think then the markets would sort of look far more positive. But having said all of this, I wouldn't expect returns of more than 10 to 15% during calendar year 2013.
What are your investors saying, incidentally? You must have spoken to a bunch of them, although it's still early hours in your conference. Are they giving you the impression that things are looking well valued?
So I think from their perspective, clearly, I mean, if you look at sectors which they have invested in over the last 1 year, like FMCG and pharma and stuff like that, there's no question that valuations are rich there. So if you need to get more flows from any of these investors, I think it will have to be across sectors where there are still valuations of possibilities in terms of growth. Clearly, the financial services sector, particularly banking, looks interesting because if monetary policy were to become a little more aggressive, and there is possibly a case for that because given that fiscal consolidation is clearly what the government is going to do, and growth is suffering, one way out of this conundrum could be to sort of have a far more relaxed monetary policy. And if that does happen, obviously it sort of positively impacts sectors like banking. So that's certainly looking positive. The other place where there seems to be some interest developing is IT. Essentially on the back of the theory that if current account deficits are around these levels and they are unlikely to sort of come down in the near future, then you have a reasonably good chance that the rupee could depreciate from these levels. And that, along with some increased spending you're seeing from US sort of clients, seems to make the IT industry look a little more positive than what it was earlier.
Fair enough, Mr. Jayaram. We'll have to leave it at that and let you run back to your conference. Thank you very much indeed for joining us. Well, incidentally, of course, Mr. Jayaram would know that the governor doesn't seem to be thinking that this is time for loose policy at all. News from Moscow, the speech he has given seems to indicate that he doesn't see too much of headroom, and I don't blame him at all. Let's take a